Welcome traders, and in this video we're going to be looking at how to actually trade gold. Okay, so as of lately, gold has become a little bit trendy and it's become quite a popular commodity and instrument to actually trade. Even from a Forex background, many traders are actually getting into gold and trying to understand the way it moves, because it can be quite fruitful actually when it does start to move. And usually it doesn't stop when it does start to move in a certain direction. So obviously it can be quite a volatile instrument, so it's super important to understand that when you do start trading gold, obviously implement very low risk to begin with in order to actually identify and understand how it moves and get control over your charts when it comes to finding trading setup. So I'm going to be breaking down gold in this video, and we're going to be looking at the XAU USD, which was most common and will be in your MetaTrader 4 platform. And yeah, to develop really a gold strategy, it's very similar to Forex. We're going to be trading it in a very similar way to just normal currency pairs, breaking the charts down using similar trading rules, trend lines, Fibonacci's, all that sort of thing, and also the moving averages to identify where the overall trade is going to be going. But obviously it's important to adapt to the tools that we're going to be using and be constantly learning when you do trade gold. And when it comes to gold, you want to obviously look for the different ways that you can use your tools in order to make it work on gold, because as mentioned before, gold is quite a reactive instrument, and it is very volatile on a short-term basis. And it tends to, once it does tend to move in a certain trend, it's quite rapid and it's quite violent within that trend. Okay, so if we look at the history of gold then, I've got the monthly open here, so we can see all of the data and all of the charts dating back to roughly early 2006. And obviously we did have a nice bull run all the way up to roughly where we are now, roughly just above $1,900 per ounce of gold. So after we did in fact reach the peak, we actually come all the way back down, and this was sort of around 2014 2013 was sort of the time where I personally got involved with gold and understanding the way it moves, sort of recording a lot of the technical analysis that I was actually doing on gold. And then obviously around 2015 is when we got the low around this point, which is roughly it was $1,050 per ounce, roughly around that $1,060 per ounce, that sort of region. And then obviously from there we have since moved a lot higher and all the way back up into fresh highs now. But if we look at the movements here, just even on the monthly, if I was to actually grab a Fibonacci tool and just put on some Fibonacci here, we can see that from the low here, point A, point B, point C, in between 61.8 and the 78.6, C retracement, and then the extensions were achieved here. I believe that we could even put on a Fibonacci from this low all the way panning up to this high here, and 61.8 is you see A, B, C, 61.8%, with the D extension yet to be achieved above the $2,200 per ounce level, which I do think is going to be coming, perhaps even to 2,300, 2,400. I do think that we can see a little bit more higher price action to come on gold. So if you look at it long term and keep the risk relatively low, then that's one way of actually trading gold and sort of using the long term initiative in order to take advantage of this commodity. Okay, so I've dropped down to a lower time frame here on the daily, and even here on the daily we can see that when it does start to trend, it does go at a fairly rapid pace. And if you actually look at the daily average on some of these daily candlesticks here, we can see that we're talking sometimes even 5, 6, 7, perhaps even 800 pip move on a daily. And obviously if you're using the similar lot sizes as you would to Forex, then you can see how a lot of traders are getting burnt out quite quickly when it comes to losing trades on gold. But we can see here low, 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 high, low, 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 high. We can see a nice downtrend here, and then recently we have in fact made new higher highs, higher lows, higher highs, and we can see this nice steady momentum rally to the upside here on gold. And that's what I mean, you know, on the medium to long term, daily, weekly time frames, once the gold charts do start to trend in a certain direction with those highs or the lows, then it does tend to run in a certain direction relatively well, and you do get nice trends when you do catch onto them. And then going down even onto a much lower time frame on the 4-hour here, we can even utilize trend lines here. We can see this ascending trend line. I'm not going to go into too much detail, but perhaps you can even use counter trend lines, similar way to Forex as well, and then just identify where you are looking for breakouts. Let's say here, stops below the prior lower swing high. If obviously it breaks that point, then we're going to continue in a downtrend. Similar methods, similar setups, and obviously you can trade it within the overall trade direction. So, you know, even here where we're currently at a current market price, we could look for pullback to the trend line and then continue, or maybe just continue higher. So, you know, you do want to use the same sort of systems, same setup, same overall chart and breakdown, looking at higher time frames and then coming all the way down to lower time frames in order to actually identify the more accurate trading setups long term. And even when it comes to monitoring the daily candlesticks, you can even look and monitor the candlesticks, identify what's happening, and in and around the moving averages, and then obviously look to make certain trading decisions on from that as well. But overall, you know, if you do decide to trade XAU USD, then obviously keep the risk low, understand the volume, and understand the lot size, the correct lot size that you should be using for your account, and the amount of risk you want to trade, depending on your pip value and a certain trade setup. Because obviously there's many factors that will determine the short-term volume and volatility on gold. So it's important to understand fully what you're actually doing when it comes to trading gold, because it is quite a difficult instrument to actually master and be profitable at long term when it comes to trading. So overall this year we did see a bit of a dip early into the year of 2021. But you know, we have had some recent positive months. We can see that gold is in fact moving a lot higher. It will in fact move in relation to other markets now, such as crypto, because gold, you know, is widely known as a safe haven. It is used as a safe haven for lots of assets and a store of wealth. So it's important to understand where the dollar's at, where certain cryptos are at, and where people are actually storing their wealth, and where it's safe to put money at the moment. I do think that overall long term gold will store a lot of its value, and it will hold a lot of its value. So it's important to understand, you know, where you want to be aiming for when it comes to actually placing your margin setups, margin trades on a, you know, much shorter term time frame. You know, if you're holding for like a trade for like 1 to 3 days, or even, you know, 1 week or 2 or even 3 weeks. You need to understand, you know, what the market sentiment is actually happening to this commodity before you just jump in blindly on gold and try and just scalp a few pips out when it, you know, obviously the gold is going to suggest a lot more of its movement on the higher time frames, because that's where it shows most clarity when it comes to looking at the overall trends and where the actual commodity is heading towards. So that's it for this video. I hope you've got a little bit more understanding on gold. I am going to be breaking it down much more in the future, so obviously stay tuned for more blogs to come. And until next time, take care traders, and trade safe.